Hello, and welcome to the Corporate Storytime podcast series. My name is Lucas Robinson, the host of the podcast. On this pod, I'll get the opportunity to talk to ASX company leaders and innovators as they run through their personal executive journeys and the stories behind the companies they are helping to grow today. I'll be leveraging my experience as a former stockbroker and my current role with investor relations consultancy, Corporate Storytime. But enough of that. For now, let's gather round, come in close, and let me tell you a story. Hello and welcome back to the Corporate Storytime podcast. Today I'm pleased to welcome Alkane Resources Managing Director, Nick Erner, back to the pod. I last recorded a chat with Nick in January, and Alkane's been extremely busy in the ensuing 6 months. During this time, New South Wales-based Alkane has delivered a 5-year plan for their flagship Tomingley Gold Operations and have also announced a scoping study which contemplates a large-scale mining and processing operation at the Boda-Kaiser gold copper project. More recently, Alkane's June 2024 quarterly activities report has confirmed an uptick in gold production from Tomingley as a result of the investment the company has made to mine and process underground material from the Roswell ore body. Nick, welcome back, mate. Does the increase in the June quarter production represent the new normal for these operations as you push towards the 100,000 ounce per annum production rate?
Yeah, g'day, Lucas. Good to be chatting again, mate. It certainly does. So we've been mining underneath the existing Tomingley deposits, which is Coloma 2, Wyoming 1, for a number of years, right? Since 2019 when we first started going underground. So all the effort we've been putting in has been extending it down to Roswell. And as well as being a significant amount of tonnage, it is higher grade, which is why we preferentially feed it. So, yeah. Particularly since we started stoping at Roswell in April, the results through May and June, solid months, is our new run rate. We've put guidance out for 70 to 80,000 ounces next year. So that's sort of 6 to 7,000 ounces a month, right?
And what did you achieve in that June month? Was it around that level?
Well, June month was nearly 8,000 ounces. So it was higher. We also had some gold within inventory to strip out, particularly inside the loaded carbons from May's performance. Yeah, that's, we did 17 and a bit thousand ounces across that April, May, June, with more of that coming in May and June than in April. So yeah, we're at that run rate now.
Yeah, that's good. So I made mention in my introduction of the 5-year plan that the company delivered a couple of months ago for the Tomingley Gold Operations. Take us through some of the highlights of that bit of news.
Yeah, thanks, Lucas. Look, we certainly didn't. I think the first thing I really want to stress to people listening is we definitely have resources, in fact, some reserves that go out beyond this 5 years. So this is what we can define with a fair degree of certainty. After 5 years, it depends on grades, different mining areas, drill outs from inferred to indicated, all that sort of stuff, right? So definitely have mine life beyond this period. So this next 5 years, as we envisage it, for the rest of 2024, so I'll talk in calendar years, right? For the rest of 2024, we are finishing construction of a flotation regrind circuit at Tomingley to improve recoveries. We are commissioning a paste plant at Roswell to improve ore recovery from underground. That's the big job for the rest of this year at Tomingley. Then next year, 2025, we're looking to do the road diversion works of the Newell Highway. That takes the better part of 2025 to do. And we're also upgrading the throughput of the plant to 1.5 million tonnes per annum. Because when we have the open cuts online, it releases a lot of ore for several years in a row. That takes place through calendar 2025. And in the start of calendar 2026, we start open cut mining. And pre-strip is not particularly expensive, a couple of $1 million. There's only sort of 15 odd meters at the sort of most shallow points in the San Antonio pits, or the first San Antonio pit. And so that sees us hit through calendar 2026, and by the start, therefore, of FY27, the middle of calendar 2026, that sees us hit 100,000 ounce run rate. And we envisage ourselves being at that run rate for a number of years after that. So they're the big milestones that we have coming up.
Yeah, and I can refer people to the quarterly in relation to the pictures that appear of the paste plant and the grind flotation facility as well, which have come a long way. If you refer back to some of the previous quarterlies where those pictures have been in place, and even not that long ago, they were conceptual kind of artist impression diagrams.
Yeah, exactly. When I was, road showing late last year in the US, they were definitely, 3D schematics. Yeah, and right now we're sort of finishing all that structural work. So we're at the stage where you don't really start to see much occurring on site, in terms of photos, because it's piping and electrical works and instrumentation and all that stuff going in. So yeah, we are substantially complete on both of those projects. And the other thing people to remember is we're substantially complete on the financial spending of those projects as well. So yeah, it's going to be quite an interesting couple of quarters.
Yeah. So I imagine now that you're sort of getting up to that run rate of producing an annualized 70 to 80,000 ounces per year from Tomingley, that you're confident that the cash that spins off, particularly at the high gold prices that prevail currently, is more than enough to spend the growth capital that you require to get to that 100,000 ounces by the beginning of financial year 27?
Yeah, we do need to increase the amount of debt that we have at the start of calendar, so late quarter one, early quarter two, calendar 2025, next year. We'll be looking to upsize that debt facility. And obviously the size and scale of the debt facility will depend on things like, price of gold between now and then, and all the other things that affect your cash balance. But yeah, certainly, we see substantial cash flows. Our all-in sustaining cost that we've modelled for FY25 is higher, $2,400 to $2,600 an ounce. The reason for that is we're doing a lot of vertical development at Roswell and substantial other, sustaining capital works at Roswell. So, but that goes, right? That goes by the middle of next year substantially, and then, our all-in sustaining cost after that drops down to around the $2,000 per ounce Aussie. And yeah, we're looking to generate significant cash from that point, as we should, right? As we should, because we will have invested several $100 million into the, discovery, definition, and extension of this project, ready to set it up for making 5+ years of cash at over $100 million a year.
Yeah. I mean, it sounds like when you hit that 100,000 ounce a year run rate, it's that's the time when shareholders really harvest all the financial gains from it. As you say, from the pipeline of investment that you've put into the project over a long period of time.
I was just going to say, and look, and that's one of the reasons why I've always described one of my visions for Alkane is to move off being a single mine company, right? Because otherwise you have this sinusoidal wave of capital investment, recuperation, generation. You can either reinvest that or pay it out, or whatever you do with that cash that's generated. And then you go into an investment cycle again as you extend new mining areas. And that cycle, you can be whatever you want to call it, 4 years, 7 years, 10 years. But that occurs on a single asset company. On a multi-asset company, if you time and sequence those things together, you get a much more stable cash flow. It's still occurring at an asset level, but it's not occurring as market leaders company level.
Well, that seems to be a good time to start talking about some of the other assets that the company's got.
Yeah.
Particularly, the next cab off the rank, which is Boda-Kaiser. I'll get you to take us through the scoping study findings and what you made of the sort of 3 scenarios that were put forward.
Yeah, so Boda-Kaiser scoping study, people remember it, in 2019 we drilled, a pretty astounding hole with the discovery of Boda, and then, built on that slowly but surely, and then ended up drilling that out to indicated for both Boda and Kaiser over the last 2 odd years, quite a substantial spend rate that's really dropped away now. We'll obviously go more into that later. And so the purpose of that is to say, what have we got? What's the value of this? How will it be developed one day? I think the first thing to say is, before I go into it and talking at a macro level, I'm pretty confident that this will be developed one day, right? As to when that one day is, it depends on commodity prices. And so when we did this modelling, we chose the current spot prices, right? We chose $3,500 an ounce Australian gold and $15,000 per tonne copper, right? So people can do their own maths on around from that. So then we looked at, okay, what might it look like? 5 million tonnes per annum, 10 million tonnes per annum, 20 million tonnes per annum processed, right? So mining obviously occurs at different rates at different times, but you result in that processing rate. And what we found was, somewhat unsurprisingly, that the bigger it is, because the resource is so big, the better the economies of scale are, and therefore the better the economics are. And at those, with the costs and everything that we had, the internal rates of returns were sort of 13%, 17 point something percent, and 24% across those three scenarios, going from 5 to 20. And capital was circa sort of 900 million, 1.4 billion, 1.8 billion. There or thereabouts, right? And so what are the main things that we learned from that? The first thing is, I had certainly expected the 5 million tonnes per annum to be a little better IRR than it was. And the reason is, I thought that with the higher grades under Boda, we'd be able to put a larger stoping solution together, something in the order of 2 to 3 million tonnes per annum. That didn't really work, for whatever reason, with the, 50 by 50 drill spacing. The most that I thought was reasonable for long hole open stoping was circa 1.5 million tonnes per annum, which doesn't really move the dial in terms of the grade coming out, in terms of the IRR. So that means that there's two things. It means economies of scale are important. And the second thing, it means that something like a sub-level cave is a much more likely underground scenario under both Kaiser and Boda. So we'll go and do some technical work on that, because we didn't really consider that much, because we're thinking the long hole open stoping underground will be a differentiation between the models. The second thing that it showed is the cash flows up front, potential cash flows up front from a 20 million tonne per annum scenario are quite substantial. So enough that, were all those assumptions to prove true, the project would be paid off in 4 and a bit years.
With a 17-year mine life in total.
17-year mine life in total, yeah, right? Well, and of course, that mine life does not include going underground for a sub-level cave. Most logically, and we'll obviously have to explore this, sometime after you've paid off the initial capital, after year 5, you would start doing, development on a sub-level cave, and then set up for, future caving operations of some description. Yeah, that would be the most logical thing. We have to go and explore that. And of course, that's all dependent on regional exploration and all the other things that affect mine life. So, yeah, it was a very, very interesting scoping study in that. What I was encouraged about was it did meet my broad assumption that there'd be a mine built there one day, government approvals permitting. And I think, it starts to give some broad financial metrics for people to value as they see fit.
Yeah. Yeah, so you've satisfied yourself that at a 20 million tonne per annum mining and processing scenario, you've got a project that can generate substantial returns over almost 20 years.
Yeah.
What's the next step for Alkane to take this project forward? What are you looking to achieve? I think you're on the record as saying that really the bulk of the spend to go and drill out these ore bodies for the time being is sort of put to bed. Where are you going to take this project? How's it going to get advanced from here?
Yeah, you're right. That bulk of spending is in the rear view for us, because we don't need to advance this resource beyond indicated to understand the preliminary economics of the project, right? So even evaluating a sub-level cave, well, you're not going to pull a sub-level cave into the first 5 years of operation, right? So it's not needed for that initial base case. So what are we doing? If you look at other announcements that we've put out, we're quietly optimistic about some of the greenfields exploration we have to the northwest, particularly at Drill Creek. So we're going right back to the basics of that. We're doing, and we've done already some of this, magnetic, gravity, and ambient noise tomography, all that sort of thing, as well as we've got soils, air core, some RC, some diamond holes, both done and planned. And what are we doing? We're looking for Boda-Kaiser repeats, but we're looking for them at similar or higher grades. If we find it just at similar grades, we don't really need to define those through to indicated anymore. We just need to get an idea of their location so that we don't, forward future planning, put infrastructure or potential infrastructure on them. If they're higher grade, then yes, we would consider, drilling them out, because clearly that would shift and change the economics of what we've put forward. But super early stages. So we're doing greenfields work. As well as that, anybody who wants to develop a project anywhere has to resolve the fundamental issues of how much power do you need and where do you get it from? So we've got an idea how much power we need, but where does it come from? There's a lot of electrical infrastructure in the Boda-Kaiser region, so that's great. Water, how much water do you need? We've got a fair idea of that. And where's that going to come from? Right, so we've got an idea of water sources. We need to run that to ground, because that also includes things like water pipeline easements, etc. You've got to continue to engage with landholders, so potentially even purchasing people's properties or coming to some future financial arrangement with landholders. You have to do all environmental studies. New South Wales, you typically collect at least 2 years worth of data, and that's on, flora, fauna, and you do some early modelling. What might noise look like, dust, light, etc. All these impacts, right? What might traffic look to and from the side? How might you need to upgrade that? We'll do all that work, right? And everyone listening should understand we've done this work that many times before. It's not funny. We did it originally for Tomingley. We did it all for the Dubbo project, which then got spun out. We've done 7 modifications to Tomingley's license, and then we did a whole project approval for the Tomingley extension project. So we're very, very familiar with this work. And we've got great relationships with consultants we regularly use that interact with the regulator all the time. So we'll go and do that work, because everybody who might want to advance this project, regardless of who they are, needs to get that work done. So whatever we do saves time. The crazy thing about it, it's time consuming and it's a little complex, but it's not expensive, right? It involves experts on the ground, but not, it's not the same as hiring a drill rig and drilling a $300,000 hole. So, we're talking $1 million, maybe 1.5 max over this time period. So we'll go ahead and do that work as well. So those two things combined, advancing what might the project look like and what might its impact be and how does that fit into the community and what needs to be done regulatory, all of that stuff, we'll do all of that and just keep advancing on that. And the other thing that we'll do is, of course, the excitement and potential and value that comes from, doing exploration. We've been pretty successful, and we obviously, the more you drill in a region, the more you understand about your deposit in the region, the better you get at finding them, unsurprisingly.
And I think people familiar with Alkane's history would know how much value has been derived from good geoscience and a successful exploration. And I know that you've got, really amazing expertise within the company to continue driving value at the drill bit.
Yeah. People often, well, they either downplay it or get excited about it, depending on their worldview on where you are in the different phases. One of the things that Alkane's done has discovered a lot of things and then driven either a corporate outcome for it, or we've developed it ourselves and, over time. And what we're really looking to do is crystallize value at different points and then create either opportunities for shareholders. So one question I get asked is, my goodness, why have you spent, the better part of, including property purchases, $70 million at Boda? That doesn't currently reflect in the share price, et cetera, et cetera, et cetera. Well, it's not a project for today. It's a project for the future. And so the potential multi-billion-dollar value that it contains one day for someone, it's not realised today. People don't pay net present value today for an as yet unapproved, undeveloped project, but it's somewhere along that continuum, right? And if you look at just the Dubbo project as an example of that, persisted with Alkane and spun out its own project, then running up to, quite a high valuation and back down again, right? But that's the story for that company to tell. But certainly, value was returned there to a block of Alkane shareholders that chose to act on that. And similarly for Boda, or, Cadia with Newcrest, or North Parkes for Rio, or Cal originally for Barrick, or however you want to look at these things, people that develop spend a period of time being broadly unloved, then suddenly it's making cash, and everyone wonders how that happened.
How did I miss that?
Yeah. And it, it's a fair thing. This could be 7 years away, but the value is not 0 and then 2 billion. And so what we're looking to do is the basic, simple things that we see as de-risking and therefore adding value. And as well as that, of course, we engage with potential partners. This isn't a journey that we have to walk alone. And there's people with both balance sheet and expertise that we're looking to engage with. And we'll do that, over the coming 12 months.
Yeah. And generational assets like this tend to attract partners with deep pockets. So keep on.
Well, they do. And, and it's a philosophical discussion, isn't it? Right. So at the moment, value is being given. This is being recorded for anyone listening in the future. This is being recorded on the 31st of July, 2024. Right. So at the moment, mid-2024, people are ascribing, and all talk is about, you've got to buy an existing asset that's a producing asset because it's de-risked and you understand it and you're faster market and all this sort of stuff. And so there's a fair bit of M&A and consolidation and stuff going on, but at the heavy end of town as well. Because people are saying, geez, it takes ages for stuff to get approved. And all of that is true. But eventually, the scarcity of those and the potential uplift in share price value and the potential impact on commodity price means that value shifts to people so that people are motivated to develop an asset, right? I'm not rushing to that point, but we have the capacity to allow that point to naturally arrive. And if there's a partner out there who sees value in that at present, well, that'll be great.
Very good. All right. Well, look, the last point I'll sort of touch on in relation to your listed investments. There's been some really successful ones, and there's been some more recent sort of events which have been a bit damaging. Has it scared you off making future investments in ASX junior mining companies, or what's your attitude?
Yeah, not at all. Not at all. I mean, I think earlier in our conversation we spoke about being a multi-mine company and what that means from a de-risk perspective, and therefore a potential value multiple that gets put on, to your company. I think similarly, when we very first started doing this in 2018, we'll call it 2018, the market was broadly that producers got a degree of value and cash flow was pretty good. And people looking to develop an asset got nothing at all, really unloved. Amazing resources like, Bellevue back then, which is now Spartan sort of now. Of course, they get recognition. Good resources get recognition. But people with modest resources, with modest returns, get virtually no recognition. And, I see value out there now, and we continue to look at that. The big difference for us compared to 2018 is we have, circa 120, 130 million bucks to deploy on our own things, which we did not have back then. We were just doing the underground extension. And even though we had an eye to this future, we didn't have those funds deployed, so we thought it was a sensible thing. So for us, anything that we do, mentally, it's not so much for immediate development, but it's for potential development in 2026 when our cash flow really ramps up, right? Where we can, potentially look at returns to shareholders at the same time as really cementing in an increase in production. So that's one group of people that we're looking at. Pretty difficult market to find value in. So we're not really looking for much more exploration stuff. But we also keep our mind out for there is value to be had by companies like Alkane. Not that there's that many, coming together. If you have similar value relativities on market, much like Silver Lake Doré right back in the day, right? So we keep our mind
or Silver Lake Red 5 more recently,
or Silver Lake Red 5, sort of similar in that you can say there's sort of like a balance sheet versus resource matchup, but let's just call it, there is some degree of synergy there that causes it to be the whole to be rated better than the individual parts.
Yeah, one and one makes three.
Yeah, we continue to be open-minded for that, because when I talk to funds, the only sort of feedback I get is, we're a bit worried about your balance sheet, therefore we won't buy. That's pretty much the only feedback I get. And we're not worried about our balance sheet because we watch it, but we watch it regardless of its level. Funnily enough, we're not worried about it because we've been delivering this for a decade, right? So we're quite comfortable, familiar, but we appreciate that others may not have a similar view. I mean, people that say that look at other companies and then don't have the same view. So I'm always baffled as to how people make decisions between different things. But nevertheless, they're the two things on our broad radar.
And just remind people, when Tomingley started operations in 2014, what was the mine life at that point? What was the reserve?
The justification that we had internally, through going for application in 2012 and getting it approved in 2013, where we then committed construction, we were going to spend $116 million, which is what we ended up spending. We had a 7-year mine life, which included underground, for a total mined, production, which included some inferred material of 378,000 ounces over 7 years.
And you produced double that?
We're north of 600,000 ounces without even going into Roswell, San Antonio, north of 600,000 ounces. So that 378,000 ounces extended into 600,000 ounces. We thought we'd do it at about $1,000 an ounce. That first period of time in open cuts was done at $1,100 an ounce. The original underground was going down for 90,000 ounces. It's now more than double that. So yeah, we have a history of resource extension, and what I've said is very common for gold mines throughout Australia.
Sure.
And if we take all the inferred material that we had at the start, and we just take the geometric shapes that we had in the open cuts, right? And you say, we thought from within these volumes, we would get X ounces, including all inferred material and everything. We got 110% of X, right? So people often say, well, what's your conversion rate of inferred to indicated? People are, well, I get 60% indicated and I get 95% production out of it. So it's a 55% conversion from inferred to produced. Ours was 110%. 155% was 110%, right? And we don't know if we'll get the same thing down at Roswell, but we do know we'll get resource extensions. We're open in all sorts of directions. We've got plenty of inferred material. That's why I'm incredibly confident of a mine life past 2029, barring absolute worldwide weird-ass price collapse.
Oh, mate, I reckon that's a pretty good way to finish. I think if Tomingley and this team haven't already demonstrated the track record that is required to deliver value from the future of this mine, then I don't know what more you could do. So congratulations on the journey so far with Tomingley. And from taking Boda-Kaiser from discovery, 5 years ago or whatever it was to the asset that it is today, and I can see a really bright future for Alkane. And I think right at the moment, if you look back on the calendar, put a pin in it for 31st of July 2024, I reckon I'd put my hand on my heart and be very confident in saying that this is a fantastic entry point for any incoming investor.
Yeah, thanks, Lucas. I couldn't agree more, and people will actually see, when by the time they've listened to this, the market will have opened. Yeah, I bought some shares. A market window opened for us as a board, like right now, and as soon as it opened, I went in and got some, right? So,
and as you know, as soon as the stock dipped below 50 cents, I was keen on buying some myself and did so.
Yeah, and it's funny sometimes. things just depart from fundamentals. And there's no doubt, of course, if you put your doom and gloom hat on and something really bad happens at Alkane, the decline collapses or there's a fire or whatever, of course. But you can do that for, I'm looking at concept sheet as we talk. You do it for nearly every company in there.
Yeah, and the sky might fall in tomorrow as well.
And the sky might fall in. But if things just go pretty much according to plan, it's pretty bright.
I'll say. Thanks, Nick. That was great.
Thanks, Lucas. Cheers, mate.
Chat to you soon.
Thank you for listening to the Corporate Storytime podcast. We're really trying to build our audience for the podcast and aim to deliver regular episodes of our chats with executives from some of the ASX's most interesting companies. If you enjoy the show, please share it with your friends, follow the podcast and give us a like wherever you download it. And if you have any feedback, please drop us a line at info@corporatestorytime.com. Thanks and all the best.